Welcome to October. Sellers, I want to share with you the type of buyers we're seeing in the market these days. And buyers, you need to know your competition looks like and the types of offers they're writing. Let's talk about down payments first. It's not uncommon, it's very predominant to see a 10% borrower these days. And it's not because they don't have any more money to put down towards the house necessarily. It's because they want a little bit of a cushion saved in their bank account in case whatever happens to the economy. The general buyer is also a little bit more conservative than what we saw, let's say, half a year or a year ago. A lot of these borrowers were waiting for the prices to do this a little bit for the last year, maybe 2 years, and now they are using this opportunity to become an active buyer. Of course, they're not saving anything financially. Prices adjusted a little bit, interest rates drove the cost of borrowing higher, so net financially these borrowers are not winning anything, but psychologically it satisfies their needs. They're just a little bit more conservative. And the further out you go from the Bay Area core job market, think about areas where you compromise a longer drive for a bigger, better house, something with more updates versus something more central. So those further out properties, essentially, we're seeing a lot more borrowers that are, I don't want to say lowballing, but we definitely see borrowers try to give an offer. Seller may reject it, seller may take it, it kind of depends. Can the seller get a little bit more? Perhaps. Is it worth it to stay in the market for a few more weeks? It's a case-by-case conversation. But a lot of borrowers in those kinds of more remote locations definitely show more signs of being conservative by nature. To help you put things into perspective, traditionally in Bay Area there has been a relationship, kind of a correlation between the property value and the down payment that we would typically see from a borrower in that area. Think about, the pricier the home, the higher the down payment. You go down a price point, down payment would get lower essentially. And we're not seeing that right now. That's why I mentioned that the 10% borrower is very, very common these days. Cash buyers are still going strong as far as investment type of properties, the ones who need a lot of work, the contractor specials. We tend to see more cash borrowers as interest rates go up. A lot of investors are getting an opportunity from getting into the market at a slightly lower price point than earlier in the year or last year. And some of them end up getting a hard money loan at crazy interest rates, which they don't care about. They're going for the value. By the time they fix up a property, we don't know where we'll be, but their intent is to sell or hold it, rent it. Just the opportunity there isn't the fix. So there's not much change to that type of a buyer. Now let's talk about the offer terms. When I talk to lenders, we are seeing generally more borrowers who have a condition on their offer to obtain financing, aka a loan contingency. So if an offer is accepted by the seller and the buyer has their contingency, if they don't get financing from the lender that they're saying they're going to use at the interest rate they're saying they're going to get with the down payment that they say they'll use, if they can't get that type of a loan, the deal is off. The loan contingency kicks in and the buyer can walk away from the transaction unharmed like it never happened. And it's not so much that the borrowers are iffier or have more risk these days. It's just that buyers want that extra kind of hedge and they're adding that contingency because they can, especially if they're the only offer on the table. If we have competition, depending on the region, we still see the more central locations move faster. Contingency might not necessarily fly versus what the competition is doing, but we are seeing more and more of this. And let's talk about rent back. Rent back is where a seller sells the house and then they become the buyer's tenant for up to 2 months after the transaction closes, giving them an opportunity to get moved. We're seeing more and more owner-occupied units, especially for single-family properties further out from the Bay Area jobs. And the complimentary rent back is pretty much gone. Thank you so much for watching and see you next time.